that, let me just say a few words before you start, Chris. I wanted to say that we are really grateful for you to be our guest today and share your experiences with the audience. I'm Ali Emdad, the Associate Dean for the Graves Business School and also the Director of the FinTech Center at Morgan. As I mentioned, the session focuses on a number of issues, including tokenization of digital assets and why it's so important right now. And in the course of that, Coley and Chris will talk about a number of other important and relevant issues, including the company that has been so instrumental in helping us. The Binance US has been with us for a couple of years now with the crypto challenge that many HBCUs are involved in. The students are learning. It's an experiential learning activity for them. And we're grateful for that opportunity as well. Catherine Coley is the CEO of Binance US, a digital asset marketplace, and she is a global business leader in the true sense. She's been around the world, worked at different companies and different countries, and she brings a wealth of information to the session, and accompanied and joined with her is with Chris Roberts, who's very, very engaged in the legal side, and he can also share his experience with us. So without further ado, Chris and Coley.
All right, fantastic. I'll start. Chris Robbins, I'm the general counsel at Binance US, and how I got here is a bit of a story. I began my career in Washington doing regulatory and risk management work for banks. I thought I was going to become an iBanker, and 2008 happened, and I decided I don't feel terribly comfortable being an iBanker at that time, and decided that I still wanted to remain in the financial services industry, but focus more on the regulatory and risk management side of things. So I started at a company called Promontory Financial Group, which was founded by Gene Ludwig, who's the former comptroller of the currency, the entity within the Department of Treasury that regulates national banks. And at 21, 22, had the opportunity to work with some of the most senior former regulators in the country, advising Wall Street banks on a variety of regulatory and risk management issues. I was there for a few years, went to law school, and decided to remain in the industry, kind of doing similar work, but more focused on the legal side. So I practiced at Cleary, Gottlieb, Steen, and Hamilton, and a firm called Buckley, both in Washington, and got tired of it. For anyone, if there's students on the call who is interested in law school, I'm always happy to talk about it. There's kind of a natural progression with a lot of people who practice in law firms, that you do it, it's great experience, then you hate it, and then you leave, which is exactly what happened to me. I got a phone call from a mutual friend of Coley and mine, and said, hey, would you be interested in building Binance US? And these opportunities certainly don't come very often, so I jumped at it. And I think in August 2019, Coley and I met up in San Francisco, and we decided to kind of launch this crazy adventure. So we've been operational since September of 2019 and have seen tremendous growth, both in headcount and our trade volume, our user growth, and it's been a wild ride, to say the least. But certainly honored to be amongst you all, and I'll pass it to Coley.
Thank you so much. You've met the person that I wouldn't be here without having Chris by my side. I took my education fairly seriously throughout my my growing up, and I went to the University of North Carolina at Chapel Hill, and I was taught one thing by my dad, and that was surround yourself with smart people. So when I learned that Chris had gone to Duke for law school, I said, at least he's smarter than I am. I can have him in my room. So we've always enjoyed that, the camaraderie of understanding where we came from, and really the benefits of working together. And really, for anyone out there looking into being a pioneer, there are amazing parts of being an innovator and an entrepreneur. And the other side of it is knowing the legal side and the regulatory elements that will allow you to carve out that place in history. And so if anything, I could go back in time, I would have gone to law school as well, because it's such a wealth of knowing where we can begin to build. You always need to have kind of the permits of construction before you go forth and build your next frontier. So that's really where we kicked things off in September of 2019, relying a lot heavily on our aspirations for where Americans could access digital assets. My background came from foreign currency trading. I thought that was the most exciting thing when I realized that there were humans involved in the movement of money around the world. And there were such a small amount of humans. There are about 3,000 sell-side FX employees around the world that are managing the current flows of corporates, mega macro investors, institutional speculators, and even mom and pops on a retail level. So that to me was just a remarkably niche area that saw so much of the world pulling in geopolitical aspects, pulling in macroeconomics, pulling in the dynamics of equities and other capital markets. And I fell in love with the idea of capital markets and this 24/7 ability to trade. FX was 24/5, you had your weekend. And so when I learned that crypto is 24/7, it just opened my mind. This meant that you could be trading something ahead of a Monday release. You could be trading the election. You could be trading on a Saturday morning when something happens in Asia. That to me was something that we would have this dynamic ability to interact with the world that we're living in at any moment that we choose. So I'll go and explain a little bit about what digital assets are, and we'll break down really how we've built out a place that is allowing the increase of access for folks to turn dollars into digital assets, which we see as a critical part of going forward in our digital world that we live in. So digital assets really become this virtual version of cash, of some form of medium of exchange or store of value that can be used and operated through the internet. The origins of this come from early days of cryptography, where they were going to be securely locking in a current value of anything through the means of math being the protective armor. This then came into fruition around the financial crisis with Satoshi Nakamoto producing the Bitcoin white paper that produced an idea or concept for a peer-to-peer network to exist purely through the electronic transmission of value through, as we know it, ones and zeros in math, basing this value in the transmission of it. The interpretation of where this peer-to-peer network has gone is really the exciting part. And I wonder today if Satoshi really would have put a footnote that said, do not create other versions or copies of this or build or innovate upon this, and where the world would be if we had not gone down that path. But what we saw in the digesting of digital assets was everyone having their own interpretation. Chris came from the world of risk and regulation and found himself in cryptocurrencies. I came from currencies and found myself in cryptocurrencies. Others come from equities, computer science, the breakdown of medical degrees coming in life sciences. There are plenty of people and the on-ramps into understanding cryptocurrencies and their impact on our lives is the lowest barrier to entry I've seen in any industry yet. And that's extremely exciting because so far, the careers or choices that we had as students, the barrier to entry to enter finance or enter law or enter medicine were so high and required such level of skill, luck, pedigree, background, appearance, that it really was isolating, and you continued to see this lack of inclusion at the highest levels of these different industries. In crypto, that all changes. The ability for you to bring your best understanding and background into this space is something that everyone can benefit from. And the fact that digital assets have only been around for almost 12 years says that none of us were born experts. None of us came from blockchain families. None of us had, generations of crypto excellence to get us here. And so therefore it's all been based on what it is that we're able to contribute, bring to the table, and, connect the dots. And that to me is the most exciting part, and why I said this is a real opportunity for our generation to really be able to define where financial assets, especially digital assets, are going. The exciting part is it doesn't have to be just finance. And so we're seeing this with the elements of tokenization take place around these things called NFTs. And so I'll explain a little bit more about how broad this ecosystem can get. But the exciting part that we're seeing is that it isn't going down an isolated path of just replicating finance or just replicating computer science, even though those are two of the most dominant forces of talent in this space so far. So I'll pause here and see if there's any questions around digital assets, and then we can explain a little bit more about really how Binance US lets you participate in the buying, selling, and trading and earning of digital assets as a means for interacting with this new frontier. No questions at the moment? All right, we'll carry on. So, how can a digital asset be considered a security? From Jamal. I'll leave this one for Chris. He might punt it to the end though.
That's a $1 million question. If I had the exact answer to that question, I think I would be the most valued person in our industry. The reality is that it's an incredibly tough question to answer for a variety of reasons. The Securities and Exchange Commission is the primary regulator of securities. So there's state blue sky laws that deal with state securities laws, but what we're primarily concerned about is the SEC. And the SEC, as some of you may know, relies on antiquated laws and regulations from the 1930s and 40s to really define what constitutes a security. So at the baseline level, there's in the case law, there's a concept called the Howey test. And the Howey test is a functional test that assesses certain characteristics of an asset to determine whether or not that asset should be characterized as a security. As an operating exchange in the digital asset space, we have to examine every asset that we list. So we have developed a multifaceted digital asset risk assessment framework to really hone in on what are the elements of a particular asset, and do those elements have a likeness to what the SEC in its case law and enforcement actions have traditionally characterized as a security. The irony of this all is that the SEC is run by commissioners and career staffers who don't always agree on what is a security. And I think this is particularly true in the context of digital assets. Over the course of the past couple of years, we've seen a lot of industry-led efforts to hone in on what we collectively believe are securities or are not securities. So one of those initiatives was the Crypto Ratings Council, which assessed specific tokens on a scale of 1 to 5, 1 being likely not a security and 5 being likely a security. And the irony of it all is that from the SEC's perspective, the determination of whether or not something is a security is a binary decision. It is a yes or a no. Whereas we as an industry have had to operate more on a spectrum. This is kind of like a security in certain aspects. You're relying on the efforts of others. You're relying on something that's centralized. There's an expectation of profit. Those are all factors that are within the Howey test that we assess. But the reality is that we actually don't know. And it's incredibly frustrating. I think in 2020, in December, the industry was kind of shocked at some of the decisions from Commissioner or Chairman Clayton's last day, his literal last day as the SEC chairman, to go public with an enforcement action regarding XRP. So XRP is the digital asset that Ripple issued about 7 years ago. And the industry collectively determined, after many discussions with the SEC that it was not a security. And the industry was really rocks when the SEC decided to litigate the matter, which is still ongoing, and take the position of now we think it's a security. So all of the US exchanges were basically forced to delist this asset because of the perceived risk that the SEC actually believes it's a security now. So to answer the question, it really depends. It's really hard, and it's constantly changing. Do I think the Howey test will be replaced by the Ripple test? I actually don't think so, because I believe that the Ripple litigation will likely settle because of some footfalls that the SEC staff has made. That case is being litigated in the Southern District of New York, and there was a motion about a week and a half ago that was decided, and the judge ultimately determined that Ripple and its counsel will get access to certain internal documents, internal communications within the SEC. So a number of our competitors went to the SEC to specifically ask about XRP and the securities law risk, and they were met with very little resistance from the SEC staff. And I'm of the belief that once some of those communications become public, that the SEC will probably change their posture and consider a settlement or withdrawing the lawsuit. So I'm skeptical that there will actually be a Ripple test coming out of the litigation.
There's a great question in here, and I think you brought up a good point about it, discussing centralization versus decentralization. So coming from a bank where I worked in my first five years, the idea and concept of centralization was extremely foreign to me. I thought there wasn't really an alternative. You worked at a bank, the bank ran everything. They were responsible for all the information. They had purview into owning all of those accounts and those clients and that data. And that was really something that there wasn't an alternative to having. That was really, everywhere you worked was a centralized force. And so the concept with digital assets and Bitcoin is that by decentralizing the power, the governance, you're able to make something more stable. You're able to have it weather all types of events that come this way, because there'll be more people that can vote into the path and future of an asset. And that is kind of the expansion of decentralization. So when we discuss centralization as an exchange, we're technically a centralized exchange. I sit here as the CEO. We have a head of legal. We have a customer support team that you can call up. We have means to which we are responsible for our customers, and really are the single point of information and building and innovation that takes place. In a decentralized platform or decentralized finance, which has really come out of the woodwork in 2020, the concept is around the building of the framework and even the protocol level being done by many contributors. So the idea that you can build a protocol with contributions to the code from 30 to 40 to 3,000 people adding in their input and voting all at once for transactions to be completed allows for it to be considered more decentralized. There's not a team to go to. There's not a customer support page. There's not a phone number to call if you need anything. And so the concept of centralized versus decentralized really comes down to the preference of our users. Do you prefer to have a more consistent experience with someone that you can call if you need help? Do you like to have a platform where everything is all put in one place? Or do you prefer that anonymity and variability that may occur in a decentralized platform? Examples of a decentralized platform would be Uniswap or 1inch or Sushi. And those are really platforms that exist with a front end that allow you to actually have multiple versions of said front end, because there's no one company behind it. And that's exciting. You see that with the likes of Serum or anything built on Solana, having multiple ways of interfacing with this protocol that indeed switches currencies or cryptocurrencies in one go. The idea behind a centralized exchange is we have a matching engine. We have a dedicated team to building and improving that. We have a constant team that's building in and expanding on the products that we're offering, and therefore a bit more consistent of a path to where we're headed versus the decentralized exchanges can can kind of stagnate or continue to innovate without much oversight. So that's really the exciting part about decentralized platforms, but the benefits of a centralized platform certainly come from a user preference and understanding that there's a consistent plan and a path and a team behind it that's being built.
Yeah, and if I could just add to kind of one of the more fundamental distinctions between centralized platforms and decentralized platforms is that us operating a centralized platform means that we have custody of our users' digital assets. So our users send their assets to us, or they purchase them through our marketplace, and we retain custody. So we have the private keys, we have the addresses, and we as a regulated financial institution are responsible for safekeeping those assets. Whereas with decentralized exchanges, the user traditionally retains control of the assets themselves. So it can be in hot wallets or in cold storage, but that's one of the fundamental distinctions. The other thing that I think is really important to hone in is that we're living in a world of the kind of proliferation of decentralized finance. But at the end of the day, if people want to purchase assets for the first time, digital assets for the first time, they need dollars. So as a centralized exchange, we serve as the fiat on-ramp. So our customers can deposit via debit card or ACH or wire transfer to us, then purchase the assets and transfer them to DeFi protocols or DEXs. So, in a world in which we have centralized exchanges and decentralized exchanges, both have to coexist and both do play important roles in the process.
One of the benefits of running Binance US is that we provide a regulated platform allowing us to follow through with the current regulations required. That includes things like KYC and compliance of making sure that we're protecting our users in our platform from anti-money laundering efforts. And those are elements that allow us to plug into the traditional landscape that is banking. So without having those regulations in place and the processes and protocols that we have to uphold those regulations, we're allowed to interface with banking providers that are where your current amounts of dollars are stored. We see this as something that is going to be changing over time. You see folks moving their dollars, which currently, or not currently, but in the past, you've kept dollars at banks because you earned yield on those savings accounts, or those you've earned an interest rate on keeping your funds in a platform as such. You also received FDIC insurance, which was some form of protection on your assets being held in a bank. The other convenience was most banks were down the street in a brick and mortar shop, and you could go and access them when you needed. In a modern world and in the digital world that we're in, take in consideration how COVID affected all of us. We were trapped in our homes. Some of us were trapped far away from our homes. And we had to really innovate on what we were going to be doing in terms of accessing our funds. I remember, I think I received a check that I needed to cash in the start of 2020, and I was nowhere near a Chase ATM to do so. And so I had to use the mobile banking deposit for the check, and the app was just not functioning with it. And I said, really, what am I supposed to do with this? How is this, am I supposed to fly somewhere, risk my life, go on a plane with this pandemic going on to get near a Chase ATM to be able to cash my check, to receive my funds, to then be able to pull them out, to put them to use somewhere else, assuming they wouldn't be earning any interest if they were sitting in the check form or if they were sitting in the bank account. So we struggle with those elements where the traditional banking system isn't working for the world that we're evolving into. We've become an insanely global, until recently, global society where the ease and use of moving our entire turtle shell, I say, to a new location requires us to abandon a local neighborhood bank and find one that's going to be working more for us. That's really where digital assets come in as an excellent savior. The ability for you to access your funds liquid at any time, trade them at any time, and move them at any time is really critical to how I see our new digital frontier evolving. We've done so with communication. Here we are on a call. It's 12:30 my time, and it could be 12:30 a.m. for anyone listening in. Anyone from around the world with this link can access it and begin to have a conversation with us. You can see us, you can hear us. It's a very new world of how we're communicating, and we've been able to get a lot done with this digital aspect of communication. What we need to do to catch up with our advancements in communication is how we pay for things, how we hold our assets, and how we can move our assets around the world. So that's really where digital assets, to me, are playing catch up with what an amazing arc of technology has already moved us into: media being digital, communication being digital, and our lifestyles being so heavily digital. I think about my phone being stuck right next to myself, and that's super exciting, but we need our money to be right next to us too. So that's really where I see digital assets and cryptocurrencies evolving and providing us new ways to which we can interact with the life that we're going to be leading.
So should we, just to get back to the agenda, happy to spend a couple of minutes just talking about who regulates digital assets, if that's helpful.
Yeah, sure. And some people are typing into the chat area. Some are doing the Q&A. It would be helpful if we stick to the Q&A so that we can see all the questions, and identify yourselves as participants, what university you're from. That would be very helpful. Chris, if you will, we can start. Yeah.
So who regulates digital assets? That is another interesting question, because there's a bifurcated approach to regulating digital assets. There's federal regulation and there's state regulation. I guess we can start with the state regulation. So within the digital asset space, states have taken a variety of approaches to how they view digital assets. Some view them as a form of money, and others do not. So as a result of that, certain states have taken the position that if you are involved in a digital asset business or virtual currency business activity, then you're required to obtain state money transmission licenses. This is an awful process. It is tedious, it's extremely expensive, and it requires interactions with state regulators in every state that you operate in. So this is what we have had to deal with. Coinbase, Gemini, all of our competitors in this space have had to go through the multi-state licensing process. And the frustration of this process is not that, we have to deal with a lot of people. It is that we have to deal with a lot of people who have varying views on what assets should be regulated and how they should be regulated. So that really is kind of a licensing and examination process. So they function more as prudential regulators. On the federal side, there are lots of different agencies that have their fingers on digital assets. Perhaps for us, most important is FinCEN. FinCEN is the Financial Crimes Enforcement Network, which is a division or a bureau within the Department of the Treasury, whose primary focus is on Bank Secrecy Act compliance. Bank Secrecy Act was a law that was passed in the 70s, and there have been a number of additional pieces of legislation, so the Patriot Act, the safekeeping of digital assets and so forth, that refine what the requirements are with respect to anti-money laundering and counter-terrorist financing regulations. So we, as a digital asset marketplace that is a money transmitter, have to register with FinCEN and are subject to their examination and compliance with the Bank Secrecy Act. There's also the CFTC, which is the Commodity Futures Trading Commission, which focuses on the regulation of commodities. So the CFTC has taken the position that only Bitcoin and Ethereum at this point are commodities. Since we operate a spot exchange, we are not subject to supervision by the CFTC, but we are subject to their fair dealing and anti-fraud requirements. So we need to make sure that we are monitoring our trade surveillance, we're conducting trade surveillance and monitoring our customers' trading activity. And then we also need to monitor for fraud, which are things that we would do in an ordinary course of business. Then there's the SEC, which I spoke about briefly, that's really focused on, are you dealing in securities? Do you need to register as a broker-dealer or an alternative trading system, and with FINRA as well? So that is a kind of whole other bucket that folks in the equity space know all too well. I think we as an industry have tried diligently for the past 6 or 7 years to avoid SEC jurisdiction. But I think with the new SEC chair, Gary Gensler, that it will become inevitable. I think they will take an aggressive position that lots of things that the industry thought were not securities are securities. And you will see a rise of digital asset exchanges becoming alternative trading systems, or at least purchasing or applying for those licenses. So they have an entity within their ownership structure that can deal in securities. I think that the verdict is still out on whether or not the SEC would have separate rules for digital assets versus traditional equities. But, we as an industry are lobbying hard for treatment of digital assets that's distinct from traditional equities, because the assets are different. So we've got a couple of questions. Does Binance plan on listing XDC? As a general matter, we do not comment on any assets that we anticipate listing. Where a number of issuers contact us on a daily basis to provide their kind of diligence material, descriptions of their project. But for insider trading rules or reasons, we typically don't comment on any asset that we're considering listing.
Chris, you may be able to explain a little bit about how we review the coins that we do go through listing and the requirements necessary for us to review in order to launch a project on Binance US.
Yeah, so there are a lot of different considerations. As I alluded to from my perspective as the lawyer in the room, the biggest risk is whether or not the asset would be treated as a security by the SEC. So that's going through our Howey test, that's doing the technical review of the blockchain that the particular asset sits on, which we have our research analysts and kind of technical experts to help us with. That's doing diligence on the founders or the key participants within the project. So running OFAC sanction screenings on those individuals, conducting diligence to make sure that the project itself is real. We get a fair number of projects that purport to be legitimate, but they're actually scams. And there is a rush to list these assets as quickly as possible so that you have a competitive advantage vis-a-vis other exchanges. But at the end of the day, we have to be thorough in our diligence. Perhaps this goes without saying, but we also do a business case review. Do we anticipate there being market demand for this particular asset to justify listing the asset? Because we have to line up market makers who will provide liquidity to ensure that there's a buyer or a seller on the other side of the transaction. So that's the big business consideration. And then I think the last one is, is this actually a project that's worthwhile? It's funny that there are a number of projects that over the course of their trajectory have actually become legitimate. In the GameStop fiasco, we also saw the Dogecoin undergo a significant amount of growth. And I think that was a couple of years ago seen as a bit of a joke, but now it's a legitimate asset that's serving as a store of value. And it's funny, and goes back to one of the earlier points, that we have to constantly evaluate these assets because they change over time. So something we were comfortable with a year ago, we may not be comfortable with anymore, or vice versa.
I think you bring up a really good point, Chris, about the adjustment or changes to fundamentals. That's been a huge part of capital markets, where there's a fundamental and a technical analysis that people go through in order to make their trading decisions, in order to understand these markets. And in crypto, it's often been confusing on what are the fundamentals that people are assessing, and what really are the elements that are driving this market forward. Dr. Annette George asked, do you believe that digital innovations are going to be the way of life in the near future? And I've had a couple conversations that really bring attention to this adjustment to how we are evaluating the world, really being critical to stay alert. And so one of the elements, I was in a conversation with a hedge fund, and hedge funds traditionally had been assessing the data that comes from global global data sources, thinking like non-farm payrolls or PMI indices of manufacturing that countries produce in order to see is it in line with the expectations of the market, or does it exceed it, or does it does it disappoint? Same thing is done with equities in the earnings calls. Are they below the expectations of the company's growth forecast, or are they above? And people speculate on those and kind of try to make their decisions around those key factors. Well, in crypto, we really don't have monthly data that is released. We also don't have earnings reports or elements that come out that people can trade around and understand. What we do have is an insanely obscure culture that really comes and is brought together by the sheer nature of the participants in the market. So one thing that this hedge fund was missing was that they were not plugged into the new levels of communication where all the conversations were taking place. No longer were all the conversations on the market taking place on the Wall Street Journal or on CNBC or on on a Bloomberg IB chats. They were taking place in Reddit. They were taking place in TikTok. They were taking place in these other forums that were not native to traditional quant investors or macro investors. And so they were having to adjust all of their models because they had no means of extracting this data to be able to make decisions based on it. And they missed huge moves in 2020 that we saw the likes of GameStop and other crypto elements that really were surges brought on by the culture and the digital natives, I would say, that are so in tune with how we're communicating, how we're speaking, how we're meming. Meme being kind of this visual interpretation, or what I kind of think are the modern day hieroglyphics of what would be etched on the walls by our modern day cavemen, explaining or expressing themselves in a way that are highly viral in their aspects and produce this kind of tsunami effect of gathering people and getting them excited about certain things. So by sheer nature that we've changed from a very technical and analytical data points that we can point to as the purpose and reason for market movements, we've come to this larger community aspect, and one that is digitally native. So when looking at the aspects of really what is America looking at right now, we've got about 55% of the US that holds equities, with about 11% of the US holding digital assets. We're going to see a conversion of those that are familiar with digital assets learning more about equities as we see cryptocurrency companies go public, as we see public companies adopt Bitcoin on their balance sheets. And it's actually bridging that gap between those that felt isolated from the traditional capital markets, as well as those in traditional capital markets having to learn the nuances about digital assets. So I'm very excited to see this wave of the merging between the world of familiar and the world of foreign, and see where that takes us. The other aspect of it is we've got about 78% of the US has pretty stable internet. With that being the key that unlocks cryptocurrency access, that's an enormous market that is available to participate in digital assets and be involved in going forward in this. So anywhere between 78 and 85% of the US having stable internet is really a critical part that we need to continue to build out and see stable internet be part of the means of being the key that unlocks your access to digital assets. The other aspect of just the sheer almost addiction of ourselves to our smartphones has led us to become mobily involved in capital markets. So trading on the fly, or monitoring your balances, or even just being curious about what's coming next, being able to Google and watch things like CoinMarketCap or CoinGecko, which monitor all of the evolving markets that are taking place, the new projects that are being launched. And that's really the fascination that I see that's taking place in this digital frontier, is that we're bringing in new elements that had not been considered and making those really critical to what you're learning. So for the teachers here and the professors, understanding those textbook fundamentals of econ and financial analysis and full corporate treasury and treasury management, those are so critical for us understanding things and getting them right. but we also need to pivot and look into how can we make analytical decisions on things that are a little more nebulous or a little less familiar than the textbook curriculum that we've been taught. And so I think there's an amazing opportunity for teachers to equip their students with those skills that are going to be critical for taking jobs in the digital frontier. And I think I saw a job requirement somewhere out there that said they were looking for a meme analyst, someone that would be curating these, almost like an art curator, being able to write out the history and the understandings of what these meant and monitor and see any patterns or translation into the price correlations that would be taking place. That is very different to the internship work that I had to do at Morgan Stanley, which was identifying, the copper prices and the impact on the Aussie dollar and the Chinese yuan. So I think that there's a real opportunity for teachers to equip their students with the basics that are critical for them to make those analytical decisions, but also lean into the new digital frontiers of how we're pulling our information and what we're taking from this information. That if I was a student back again, I would really want to be able to have a strong understanding of that in order to take on a role in this next frontier. The best part is, and I think Chris alludes a little bit to his career path going in one direction and ending up in crypto, he really was being able to build upon every part of his career to be perfect in the scenario now for what we were having in front of us. And so as we see students taking different career paths, just consider really where you can be building these blocks and seeing them as something that can add to a whole. I would say it was a direct deviation from going from a trader to someone building out a platform, but I'm able to build upon what I know, my customers, how they liked trading platforms, what they were looking for, the expectations and urgency around managing money, and translate that into the elements that we need in order to build a platform. So I ask for all those that are teaching one curriculum to broaden the scope of what they're going to be understanding, so that your students are better equipped for a variety of careers.
Excellent. We have a few questions on the platform itself. And one question is from Ayla Lubin from Morgan State. And what is Binance US doing with respect to the scalability aspects?
Excellent question. So when we began, we were a very small team. And so in terms of scaling our team, we began to really apply resources to where we were going to see the largest elements block our growth or our progress. So if we consider every single person that signs up for our platform has to go through the reviewing process of onboarding, and then has to go through the depositing funds and trading element. The biggest hurdles for us are really that onboarding process, as well as the support function to be able to cater to any issues that they may have during the journey and experience on Binance US. So while we were building what we seemed to be a rather traditional business, we were catering and focusing on putting our users first. So making sure that we were building out our customer support team and our compliance team to be able to handle the influx of new users, as well as anticipating the changes and larger adoption that was taking place in the market. Now, no one would predict the elements that we saw in the market in late December and early January, February, and March. I would say we all put our heads together around Thanksgiving and realized that all of us were going to be working through Thanksgiving, and we were going to need a lot more people on the team to be able to do so. So in terms of the growth that we've predicted, we're actually having to expand our team substantially to keep up with the growing demand and the elements of running much larger money through our platform. So in 2020, early kind of this time last year, we were probably doing anywhere between $5 to $10 million, maybe upwards of $20 million on the platform. Whereas yesterday we were doing about 750 million on the platform. So you can imagine it's remarkable, because you think, it was stressful, and we were building things back then with only a small amount of money flowing through. We have the same amount of hours in the day, and yet we're doing a substantially larger amount of volume through our platform. So where we have to scale that, we have an enormous list of hiring recommendations going out right now. And that really spans across all parts of our business, whether it's finance, whether it's business development, sales, marketing, compliance, customer support, operations, legal. Those are all the main key departments inside of our business that really help us running. And the key ones that are going to be critical for us to be able to accommodate and keep up the scale are our ability to automate as much as we can, and the ability to hire great talent in that can scale our organization in the compliance and the customer support function, while also having really strong revenue drivers, folks that are able to connect the dots and bring more customers into our platform. But
Thanks. So
there's an amazing amount of careers in crypto, and I think having come from one that I thought was a direct correlation of currency trader to a cryptocurrency trader made sense, but the design elements, the app, the product design, there are so many different paths that get you in the door that are critical to the growth of cryptocurrencies. I think it's really critical to think about what excites you, what is your passion, and how that can be applied to the digital frontier. And there's obviously a place for you if you bring both of that and your expertise and your hunger to learn more along the way.
Colleen and Chris, there's so much interest in your discussions. We have generated a lot of questions.
Do a fire round with some of these questions.
We'll do real quick answers. Chris, you want to start them off?
Yeah, so I'll scroll through and look for the easiest ones. Why is the number of assets listed on Binance significantly higher than Binance US? That answer is pretty simple. We're separate companies. Binance US caters solely to US customers and US persons. And as such, we have to comply with federal regulations regarding what we can and cannot list. So there are assets on Binance that may or may not be securities that we in the US couldn't list. So that's the primary reason. What else? Personal opinion, does market cap have a direct connection with price? Maybe. It is the short answer. I think one of the kind of fundamental things when I talk to people about Bitcoin, they say, oh, Bitcoin is a speculative asset. How is it worth $60,000 with it, which is what it is trading at today? And I tell them, sure, the asset in and of itself may just be a bunch of numbers and algorithms that are being solved. But at the end of the day, you also have to bake into the valuation and market cap the fact that there's been hundreds of billions of dollars of money invested in the infrastructure to expand BTC mining, to create funds, to create exchanges. So the inherent value of BTC, Ethereum, and other assets needs to be looked at in the context of how much money has been invested and built on the platform or the specific blockchain. So maybe is the short answer.
There's also something that I always like to reiterate this on any call that I'm on. The traditional concept of if you want to be investing in something or if you want to be buying something, you have to buy the whole thing. In Bitcoin, you can buy a fractional amount out to many decimal points. On our platform, we do out to 4 decimal points or out to 8 decimal points, depending on what your base currency is that you're going to be purchasing. But you can buy a very small amount of Bitcoin in order to participate in Bitcoin. You don't have to buy $60,000 to buy a whole Bitcoin. You can buy $20 worth of Bitcoin, $200 worth of Bitcoin, and grow from there. So that's just a understanding that I want to make sure it's clear that some people interpret if they want to be getting into crypto, they should be looking at low market cap elements because they think they're cheaper. But the critical idea is that it's really just the portion of amount that you want to be investing can be really any amount. And you can take part in these digital assets because they have the ability to be cut up into smaller pieces or fractionalized rather than having to buy a whole element of them or one share like a stock.
Makes sense. Another question, crypto mining is increasing rapidly throughout the world. So does environmental pollution. Is there anything to do while it's a peer-to-peer transaction where government restriction is not an option? I think that's a great question. And there's been a tremendous amount of commentary in the industry about the environmental cost of mining certain assets, in particular Bitcoin. And one of the fantastic developments that we have seen over the course of the past few years is a broad transition from proof of work consensus mechanisms to proof of stake consensus mechanisms. So when a Bitcoin transaction is being confirmed, you're relying on a network of computers to solve this really tricky algorithm, and it gets increasingly difficult as the supply of Bitcoin to be mined actually decreases. So it gets harder and harder and harder and requires more energy consumption. And people recognize that that latency was not necessarily a good thing. And we've seen a wave of new protocols that rely on proof of staking mechanisms, which allows for that same consensus, but doesn't require the solving of a complex algorithm. So that's one of the ways I think the industry is adapting to some of those environmental concerns. What else do we have? Before a few months ago, I had never heard of cryptocurrency. Is investing in this currency better than stocks? Where do you see growth in the next 5 to 10 years? I'll take the first part of this and I'll let Coley. We are not investment advisors. None of the information that we tell you is investment advice. My own opinion is that it makes sense to have a diversified portfolio. And the general consensus within the industry is that some exposure to digital assets is probably a good thing. But Coley, what are your thoughts?
I'll fill it in with really what are you trying to invest in? If you're trying to invest your time in something that keeps you fascinated, if you're trying to keep your mind as curious as possible and something that can constantly evolve in front of you, if you're trying to spend your energy and your money on something that is going to be responsible for how your generation is defined and how the society that you're going to be living in is changing, then that to me is where digital assets make sense. I've committed not only some of my personal capital, but my whole life to digital assets. So I think you can invest in different things, whether you're an investor and want to be allocating funds, or you want to be putting your entire career, spending your days and hours looking into digital assets and your curiosity capital is kind of what I call it, into digital assets. And if that's the case, it's been a very fruitful investment for me for the last 4 years. I've kept busy, curious, surrounded by intellectual folks that continue to make me challenge and think about this world that we're in. Not only being able to give careers to folks, bring in great new talent, build an inclusive team that may not look like the prior businesses that I had been working for. And that to me is something extremely special about where you can really put your definition on digital assets. So for the next 5 to 10 years, I'd say do something that gives you this amount of excitement. And for me, that's digital assets.
Another question, or a question from Dr. George, which I think is a really good one. Do you believe that all of this digital innovation is going to be the way of life in the near future? The short answer is no, I don't. But when it comes to financial services, I absolutely do believe that digital innovation is the future. And it boils down to what I believe is the fundamental question. Why should we be reliant on intermediaries like traditional banks to tell us when we can pay people, when we can settle transactions, how much interest we can earn? Banks obviously play a incredibly important role in our financial system. But when I have the ability to pay someone immediately in an instant transaction that is settled in milliseconds, why wouldn't I want to be able to do that if I know that it's secure, the entity that has created the protocol is regulated? And as a general matter, we talk about inclusion in the financial services space. And I think the move towards digital innovation is a move towards financial inclusion. The fact that I can receive payment instantly from my employer and not have to go to a check cashing facility to pay, $10 to cash a check, that is a truly monumental development, in my opinion, and something that we as an industry need to embrace. So in a world in which almost all of us have smartphones and can download an app almost instantaneously, I think our financial system has made that turn, and the future is digital innovation.
Absolutely. On the other side of outside of finance, we've seen NFTs, or non-fungible tokens, really innovate how brands are interacting with this more digital generation. So the idea of bringing artists, musicians, athletes, and folks together to monetize their brand in ways that we saw Instagram allow influencers to be able to create platforms and communities around their pictures. We're now seeing folks be able to create collectible digital items that have a scarcity factor to them, as well as a unique factor of allowing creativity to be visual, but yet digitally collected and custodied. So that to me is something that I am really looking forward to seeing the expansion of it. However, I think there's a huge element that is critical on the financial side that has to play catch up for us to be able to interact in this digital frontier and not be held back.
There are a few more questions as we go. People keep asking, posting.
I think we've covered a lot of them, or maybe the ones they've stopped filling up my chat window.
This one is, will BTC be considered a financial weapon of China, since more than 55% of it is mined in China? Is it also true China can reverse or manipulate BTC transactions?
I think it would be really bold of me to be able to make a comment on that that would be founded in more context than just reading it right here. I certainly think that the elements of digital assets are helping us move away from a reliance on governments, and therefore attracting governments to consider their own central bank digital assets. We see that with the digital yuan. We see that with the ECB and even the US looking into a digital dollar. So those elements of understanding how critical this composition of creating value through mathematical securing it mathematically is really an element that I think every industry is looking at how they can be a part of it. But from the understanding of a concentrated element of where BTC is mined and having an overarching hand in it, I really think that's simplifying it too much. I'm more curious to see really where we're seeing the greater adoption take place in digital assets and how that's been improving people's lives rather than making it worse for them.
Very good. Thank you. I think we've come to the end of our 1 hour session. We're a little bit past 1 hour. I want to say that thank you, Catherine Coley and Chris Robbins, for a fascinating and informative, thought-provoking discussion. This was really an excellent discussion on a very important topic or series of topics. We thank all of the faculty and students for participating and asking all of these great questions. And all the people behind the scene that made this session happen. Thank you. And also our supporter, sponsor, Ripple, has been a very good supporter of us from the beginning, and we appreciate that very much. Thank you also for the university for making the FinTech Center a center of activity and making us be able to provide outreach to all other HBCUs. Please join us for the next webinar, which is coming up on April 15th with Anup Nandra, the global blockchain leader for Amazon Web Services. And he'll discuss disruptive fintech trends and how they are transforming jobs. With that, again, thank you, Coley and Chris and Sanjay for helping us with this session. Be well. Talk to you soon.
Thank you so much.
Thank you.
Thanks.
Bye-bye.